Hello everyone, and thank you for joining us today. I'm going to go ahead and get started. Probably have some more join, but just wanted to start by greeting you all from the Town Council and Town Manager, so from Mayor Murphy and Town Manager Kelly Udall. Just want to know that we are fully supportive of you, and I'm sure as you've been doing, been very busy, keeping up on all the different changes. If you listened into the ACA webinar earlier this week, that was excellent. I'm sure things have even changed since then. I'd like to definitely point you to any more information that you would need to our COVID-19 page. So if you go to sahuarita.com, there's a link right at the top to our COVID-19 page, and then at the bottom there is a business resources link for you if you haven't been there. I want you to know we are recording this. We hope, or we should be able to share it later. So if you have others that weren't able to listen in, we can share it with them. This is our first webinar that we are doing, as many others are. We're looking to making it possibly a series. We're talking with a few others as well, so we may do one next week already or later, so stay tuned for that. Thank you to all who have filled out our survey, and we really appreciate that data and are trying to respond to that in kind and do what we can. This is an interactive thing, so Ellen is going to give about a 15 or 20 minute presentation with some slides, and then we'll have some question and answer time. There are two options on the bottom, but we're going to ask for those that are in that you do you submit those on the chat line, just to kind of keep things a little simpler. So if you could put your questions on the chat bar, that would be appreciated. And I see, yeah, Victor just shared our page on the website. So again, thank you all very much. Things are swiftly changing. I believe it's today that the Paycheck Protection Program is going into effect. So no doubt many like you are eagerly awaiting that. And we are blessed to have Ellen Kirton from the Small Business Development Center at Pima Community College join us today. She has been a resource for us and for many of you. So we thank you all for joining, and we thank Ellen. Ellen has a background in banking, 30 plus years, and just a lot of experience. So we really appreciate her coming on and doing this. She's been very busy all week doing webinars, and heard before this she was on 3 or 4 different phone calls at once. So we're very grateful that she was taking time out to join us. So with that, I will hand it over to Ellen, and I will share my screen to get the slides on. So Ellen.
Okay. Good afternoon, everyone. We can probably do this as a slideshow. I don't know if you can click on it. There we go. All right. So I probably know a number of you on the phone, and I know this is really trying times. Yes, as a 35-year banker, and our SPDC is funded by the SBA. So the good news about that is that I get a lot of the information that the SBA is sending out. And so every day things change, and wanted to be sure and keep up. So I contacted Michael and said, I'll be glad to do this webinar, which I've done for almost every town chamber. So I think you'll find this helpful. And then afterwards, there'll be some contact information, and be able to assist folks individually. So let's go to the next slide. Okay, so yeah, this is me, in case you wonder. All right, next. All right, so let me tell you about the Small Business Development Center for just a moment. We're funded primarily by the SBA, Pima College, and the Arizona Commerce Authority. And because we are funded by the SBA, we are getting the latest information, sometimes by hour, sometimes by minute, but that's been really helpful since we are part of SBA. So what does this do? It enables us to provide no-cost one-on-one counseling for small business, especially now with this COVID-19 crisis. I say no cost because it's not free. It's no cost because the SBA and the college fund us. And we serve both Pima and Santa Cruz County. Next. This is our team. So there's 3 of us that work one-on-one with clients. So Karen Burns also is a long-term banker. Rick Loveland has owned many businesses and has a strong procurement background. And Shelley Martinez is our glue. She's going to be the chief contact you'll see at the end of the slides. Okay. All right, so let's first talk about the disaster recovery loans. You'll see the initials EIDL in case you see that and wonder which loan are they talking about. So let me preface all this by saying I am just so amazed at how quickly all this came together. When we think about the SBA and we think about the disasters they cover, it might be a flood, it might be a bridge down, it might be so many different things. But the difference now is that this encompasses the whole country. It's not isolated to one place. And so the line that they had and the bandwidth that they had was not for the extent of this kind of crisis. And so the disaster recovery loans, initially they were trying to make a decision within 3 days and fund within 3 weeks. This is the 3rd week. I've not heard of any fundings yet. Hopefully they're getting closer, but just pure volume. I want you to understand that. But the fact that they were able to put this together in this amount of time is nothing short of amazing. When we think about who's small business, which is who SBA serves, for Tucson, as an example, 94% of businesses are considered small business by the SBA. So if you multiply that across all the states, you can see what kind of volume we're talking about. We're going to talk about Paycheck Protection Program loans. That was just initiated today. There's information coming in almost by the hour. And then they did come up with a bridge loan, and that's emergency economic injury grants that are $10,000. Now, the 1st and 3rd are funded by the SBA. The Paycheck Protection loans are funded by the Treasury. So the stimulus package that you all heard about, this is a part of that, where the other are traditional, more traditional SBA lending coming out of the SBA bank, if you will. So that's the difference between the two. And while I'll be talking about I'm going to just say PPP because it's just easier. So when we talk about those loans, it's a pretty big pot of money. However, I want you to think again about the number of businesses that are going to be applying to this. So I'll repeat this after, but sooner is better than later. Okay, next. Okay, so the disaster relief, just one at a time, Michael, forgot about this. So with these relief loans, you can apply online or by mail. Most are applying online, and you'll get assigned a number and then you're in the queue. By mail, the reason that that's available is the volume for the online was huge. And so some chose to apply by mail. Okay, next. So early stage companies are included. That was good to hear because oftentimes with SBA loans, they are looking at seasoned companies, but early stage companies can be included. Next. Midway of the last 3 weeks, they had decided that no tax returns would be required. And when you think about it, that's probably the most paperwork that even needs to be uploaded or mailed. And so there's a form 4506. Lenders are familiar with this because when you get a loan, they always have you sign this. What they're doing is validating what you provided them in your copies of tax returns. So this way, the SBA just goes to the IRS, and the IRS sends them your tax return. So that cut down a lot of paperwork. The disaster relief loans reimburse expenses only. So it's, again, no profit or, extraneous things. All they're looking to do is help companies out by reimbursing expenses. And when I talk about a couple different loans, this doesn't like somebody's internet. When we're thinking about expenses, there's specific ones such as they will reimburse for like mortgage payments, utilities, those kinds of things. But they're not going to reimburse for profit. They're not going to take a look at your bottom line and try and replace that. It's going to be specific expenses. So be sure if you apply that that's all you're requesting. Okay. There's a 1-year deferment on payments. The loans are, if you get one of these, it's a pretty cool loan. It's not cool what the circumstances created it, but the loan itself will have, it's a 30-year loan and a 1% interest rate. So I think you can see the payments are going to be affordable. And generally these payments start after 6 months. So the whole point is to try and get you these next 6 months to get whole again, and then you would start making the payments. Okay, what's next? Okay, so because of the time element that I was mentioning that there is in getting these processed, they did make available a $10,000 bridge loan. And so many are applying for that so that they can get some working capital started. Okay, next. All right, I can just tell you as a past banker that if I got in 3 packages and the first one was just a mess, I couldn't find anything or where it is, wasn't organized. Ultimately, it was all there. The second one was neat and all of that had pieces missing, and the third one was complete, ready to go. Which one am I going to look at first? With the volume that they're getting, it's very important. And when you go to apply, it's pretty straightforward, everything that you need. So you please don't send it in, don't push the button to go until you make sure everything is complete that they're asking for. And again, for these loans, it's more like a traditional loan package where they're going to want your financials, your P&Ls, your balance sheets. They're going to be looking for your financials, payroll, definitely for the second loan, but there's whatever they're asking you for, you want to be sure and everything at once. And they will send you a number. That's kind of New York if you heard that. Again, you want to be sure everything is in there, because if they come back to you and say, we're missing A, B, or C, guess where it's going to go? Right to the bottom of the pile. You're not going to stay on top for them to do when you get that back. So please, that's the best secret advice that I can give you. Estimating your losses, that's going to be important. So I know you all know you're struggling because either your store's not open, your business isn't open, you've had to lay people off, all the things that are happening right now. So when you're estimating losses, just be factual. Just be factual. Keep in mind the SBA is the government, and it's very important that everything be straightforward and everything be included. I know I'm stressing that a lot, but I can just tell you it's going to make a difference in the time for your processing and their ability to approve it. Collateral is required, and if you have it, they will take it. I think for all my years of banking, we used to say, if you got an SBA loan, they take everything but your firstborn child. It sort of feels that way, because if you own it, they're going to take it as collateral. So just be prepared. That could be a lien on your house. It could be a lien on your car, your other assets. So just be prepared. They're making these loans available, as I say, a very good rate, a term. And so that's their protection, is having this collateral. So just be aware that that's going to come up. And what you'll be doing, one of the forms you'll fill out is a personal financial statement. Please don't exclude things. If there's a way to find things out, they will be. Just be totally honest. And on your personal financial statement, you really want to complete it. And you'll be listing all your assets, everything you own, and what you owe against it. For the company, there will be a form for the debt that you owe. Please be complete on that as well. So if you have a building loan, if you have trucks, you have equipment, whatever any of those things are, they're going to pull what's called a UCC filing. And so whenever a lender takes collateral, they file this form, and it's open to the public. So again, just be, include everything and not exclude anything, okay? And the duplications are, if you are applying for both loans, which you can, this one and the PPP, you cannot duplicate what you're asking for. So if you're asking for some mortgage protection on this loan, you can't ask for it on the PPP. Now the PPP is more limited as to what they're lending. The mortgage and the utilities are probably the two that could be duplicated, but just be sure to know that you can't. Okay, next. All right, so please, if you have questions in regard to that, to those two loans, the disaster recovery loans or the bridge, just put them in the chat and I'll be answering them at the end. So the Paycheck Protection Program came out today. And so these include businesses that started as late as February 15th. And they do include 501c3s and 19, and also franchisees. That's not always been the case, but it is for this loan. The whole purpose of this, when you look at the CARES Act, and if any of you want to go online and look at it, CARES, CAPS, that is really the $2 trillion that were made available by the U.S. Treasury. And so that's where this is coming from. And as I say, the Treasury has, I think it's just under $400 billion, which sounds like a lot, but I can just tell you it'll go quick. So sooner is better than later. I know I'm repeating myself about a couple of things, but that's because they're important. All right, so these are going to go through banks that are SBA approved. And in Southern Arizona, there's about, I'm trying to think, maybe about 30 that are approved. So you'll want to know if your bank is. So all the big banks, Chase and Wells Fargo and et cetera, are approved. There's a couple of credit unions, and then there's some mid-sized banks like National Bank of Arizona, Commerce Bank. So I do have a list of those, of who's approved. That's the only place you can go and get these loans. So what these institutions have been doing, and I can tell you we've already checked Wells and Chase and National Bank, you're going to go online to their website, and there should be specifically a portal for the PPP program. And you will go on there, and that's where you will complete the application. So, so what are lenders looking for from you? In this particular case, because it has to do with paychecks, let me tell you this about it. First of all, the good news is this loan can be forgiven. There are elements that go with that, and that's something to look at down the road, but just know that in large part this can. And the whole point is to keep employees, or if you've had to lay people off because you've been told they have to work at home, and the college, we're all working at home, then you need to hire them back, as there's a date for that. I believe it's June. So, and if that needs to be adjusted because this goes longer, hopefully not, we'll be notified. So on this program, when you go in to fill out the application, the biggest thing you're going to need to have is going to be payroll records. And basically what they're going to fund is they're going to take a look at 12 months of payroll. You can't say January, June, November. You can't be doing that. So you want to take 12 continuous months. So what most companies are going to do, unless there's something drastic different the first few months of this year, you can take all of 2019 and have your payroll records. And what they're going to do is they're going to take an average of those, and then they will lend up to 25% of that. So I know that that's probably the most difficult to understand. I just want to make sure that just have everything in front of me. So loans can be for up to how large can my loan be? Loans can be for up to 2 months of your average monthly payroll cost from the last year, plus additional 25% of that amount. So, and there's a cap, which I don't think any of us probably would reach. So it can't be any employees over 100,000, doesn't count in there. So if you would take all of 19 and take what your payroll is, then that gets averaged. And then that average is what they use as a base. Okay. How large can a loan be? Loans can be up to 2 months of your average monthly payroll cost, plus an additional 25% of this average that you come up with. I think, you're not going to be submitting a dollar amount. The lender's going to come up with it. Unless you're able to, you want to try and calculate it yourself. So you're going to take that average times 25%, but the lender's going to determine the amount. It's pretty straightforward underwriting. There's, again, no discretion in here. This one is amazing to me that they're not, there's no collateral on this loan, which as a banker is unreal. The loan goes for a term of 2 years if not forgiven before. There's no personal guarantee, and those are just amazing things to me. So again, a lot of what they're trying to do is to have you rehire. So you have until June 30th, 2020 to restore your full-time employment and salary levels for any changes made between February 15th and April 26th. So the forgiveness comes in when in terms of, and you'll get all that information with the loan, comes in terms of, keeping your employees employed. Bringing people back, again, I have one client that had to close their shop, had to lay everyone off. But as soon as, the all clear comes, they're all coming back. So that's exactly what they're trying to accomplish with this. Okay. Let me see if there's anything else specific that the loan itself is at a very favorable rate and over a period of time. So I think the payments are, again, going to be pretty favorable. And it's the question of how much of my loan will be forgiven. You will owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest, rent, and utilities. Payments over 8 weeks after getting the loan. So they're using that 8 week period to look at. And so it's implicit. And if you are asking in addition to some payroll coverage, that should represent 75% of your request and 25% towards mortgage utility costs. So the majority of this and the whole focus of this is for your employees, for their payroll to be protected. Okay. All right. So what are lenders looking for? Again, when you go in and you apply, the biggest thing that will be probably new for you, because they're not asking for a lot of financial information. They're basically lending based on your payroll. So you want to get your records for the last, you can do the last 12 months. You can do all of 19 is allowed, or if you want to do April 1st to this March 30th, if that, whichever is larger, you would probably want to go that route. So, so payroll records is probably the thing that's going to be unusual. The other thing they are doing, I should add this to the slide, is they're going to verify you and your ownership. So what I recommend is that what you have with the Corporation Commission is what you should use, because I believe they will be going there to look at it. I know we always did. So what that means is if, you know, if John owns 50% and Mary owns 50%, exactly as it's recorded, that's how you want to report it, and you'll be signing and verifying that. It's very important information, okay? When's the right time to work with us? As you are going through the process and you have questions, I'm going to be sending out some links, Michael, that you'll send out after. And with that, there's a registration form with the SPDC. And again, we're talking to people all through this. It's like at the beginning, would I qualify? It's to the point where, do I have everything? What do we look like? And questions along the way. So the right time is when you need us. And then the other part that we want to work with you on is after the fact. So when we all go back to work, it's going to be a whole new world. And so sitting down and recasting and forecasting your business would be something we'd be working with clients on, because there's a recovery period and all that goes with that. So again, you're going to be going to the approved lender website for applications. And it's been recommended by one of the lenders I talked to that somewhere on the top, if you already have a lender at your bank, okay, not the, you know, not so much the branch manager, but if you've gotten loans or you've worked with a lender at the bank, you want to put the lender's name somehow on the top, so that that can go to that person. Otherwise, I don't know if they're going through and looking at every application and say who works with them. So that was just a hint that they gave me, which I thought was really good. Okay, next. All right, so this is what PPP covers, covering the cost of retaining employees, forgiveness of up to 8 weeks of payroll, 100% federally guaranteed. So the Treasury's giving the cash and the SBA is guaranteeing the loan. So that's how this is working, but no SBA fees, which usually there's an SBA fee that goes to the length of the time you have the loan. That will not be the case. There's a 6-month deferral if you need some time to ramp up to making payments. And then again, who's making these loans? These are these SBA approved lenders. And I will send, there's a link where you can put your zip code in, and it can direct you to the nearest. I say all the big banks are, but there's a number of, I'm just looking at the list, and the list that I have includes, it's the whole state. And so there's there's a couple credit unions, not very many, and some specialty lenders. So we can make that available. Okay, next. Can companies apply for both? Yes, but no duplication. So again, if on the disaster relief loan, you want to cover mortgage and utilities, you can't apply for that with the PPP. So if you need both, I would say apply for both. And maybe the 10,000 bridge loan may be sufficient. So, and then here's contact information for the SPDC. Shelly Martinez is my right hand, and so she's coordinating all the requests coming in. And if you will, if you do that or you register, please note that you're on this webinar, and then you would be working with me. So I think we did well with time, right, Michael?
Yes.
Okay.
I just got maybe a clarification too about the payroll that is reimbursable. And I think maybe we said 25%, but we got something that was saying maybe it's 250% actually, or I don't know.
Say that again? So 20.
Loans can be
So what they're
equivalent.
looking.
It said loans can be equivalent to 250% of the borrower's average monthly payroll costs.
So they're looking, right, so you're going to be, this is where the 12-month average comes in, and then that's multiplied. So that's why the payroll records are really critical.
Gotcha.
Okay. So do we have some questions?
Yeah, I'll just stop the screen sharing and we'll look on the side. Okay. America received. Randy says the Bank of America received 60,000 Paycheck Protection Program applications totaling $6 billion in requests. So yeah, I mean, like you said, that's just one bank. So yeah, that 400 or so billion, yeah, will go pretty quick.
Well, the thing is, when you look at the big banks, Wells Fargo, Bank of America, Chase, that's across, they have across the country. So that won't be just Arizona. When you're looking at Arizona banks, that's going to be smaller numbers. Probably the number of clients will keep growing, and so keep that in mind. That will be some are statewide. So if you have statewide banks that are both in the Phoenix area and here, or the whole state, that's going to be different than a credit union just here in Tucson.
Right. So I got a question. What is the mindset of the lenders right now, like from your network? Are there any insights you can share kind of about what they're thinking right now, or how is this going to be different than how they would normally treat, business loans, or just maybe speak to that a little bit?
Yeah, so the disaster relief loans, they have a specific way they go about those, and it's pretty evenly distributed. That's far more complex. You're sending up financial statements. Again, they're getting the tax return. They're looking, so that's broader and it can cover more. The difference is they're doing more traditional and SBA underwriting. So understanding the fact that this isn't business as normal and expecting the ratios they would usually see, but they're doing a more complex underwriting. With the PPP loans, they really are focused on personnel and keeping people paid. And so that's why the underwriting is so much more decreased. And they're really looking at covering payroll costs. Again, the mortgage and the utilities can be added. They should be under 25% of the whole request. So I hope that helps differentiate the two. So the SBA, the disaster relief loans are going to be underwritten more like traditional SBA loans, where the PPP has very specific underwriting that they're looking at that has to do with your people, your employees, and payroll. That's the difference. You're not even sending in financial information that I see. The primary thing they're looking at is payroll records. They're looking at how you hold your business and verifying all that. That's been, we haven't seen the whole application yet. I have one client who is just applying today, is going to send that to me so I can see the whole application.
Okay, I just had a question. So if the PPP loan is used for 100%, if 100% of the loan is used for payroll only, is 100% of that loan forgiven? Is that correct?
So the answer is probably yes, because the part that they're forgiving has to do with payroll, and that's why they're saying they want it to be at least 75% of the loan, that the mortgage and others should just be a small portion. So there's going to be specific rules about the forgiveness. I don't have all the information on that yet. There's going to be when you hire employees back. There's some specific parameters that as soon as I see the first loan documentation, I will know more. I just know what they're telling us now.
Right.
So, okay. So the forgiveness, there's this forgiveness portion to this, which makes this one really highly desirable.
Yeah. Yep. And one other one we had was, if a company is still generating some revenue and profit during this time, is the loan forgiveness offset proportionately?
This really has to do with having employees and keeping them hired and bringing employees back. Again, you're not sending in financials, so it doesn't apply.
Okay.
Okay, this is strictly based, this is payroll based.
Okay. Then I had one other question just come in. Person says, I am a sole proprietor. I only bring in approximately $4,500 a month. This income covers all my living expenses along with rent and utilities at my fitness studio. Is this worth borrowing money? I will have a debt on top of my regular expenses. So that was a question I had too, is sole proprietors and sole proprietors and independent contractors are eligible to apply for this, correct?
Correct.
Okay. And I guess they were asking if that makes sense for them, if they only bring in $4,500 and the income covers all living expenses along with rent and utilities, is it worth borrowing money if she'll have debt on top of the regular expenses?
Well, this is really meant for the paycheck. What you do with your paycheck, they're not asking. So I don't understand the part about what the expenses are. They're looking at, you're going to tell them for 12 months, this is what the average payroll has been. So again, not one loan's gone all the way through. It just started today, so I haven't seen the end of that. But
Right.
For what we're saying, it's really what the payroll is, and so what he does with that. And I don't know if he separates it. There's, typically sole proprietors, they're doing a regular personal tax return and have a Schedule C, and that breaks down expenses, so those expenses would be excluded. So I think that's how they're going to probably be looking at it.
Okay. And if they have other questions afterwards, specifically, they can probably email you is best, I think you said before the meeting. We had one other question come in. The person says, we have been open for about a year. It's a food truck. They say technically we are at a loss for this year. We make enough just for business bills, and he and his wife and daughter run it. And they're asking, what can they qualify for?
So again, on the PPP loan, it does not get into the profit and loss of the company, so the loss would not matter from that standpoint. In terms of the disaster relief, again, what they're looking for is what does the company need to survive each month? And I have not seen one fully underwritten in terms of if they have a loss, does that negate them getting assistance? So until I see that whole, process going through, I probably, if they're both still working, is the food truck still operational?
They would have to.
Can you answer, whoever that had asked that question?
the food truck, are you still in business? Are you still operating right now? Oh, they said we are closed.
They're closed. I think my sense is that it would be worth it to file for the PPP, and if you're taking a paycheck. If you haven't been taking a paycheck, then this won't qualify. If you have been, this is all about replenishing paychecks. So again, if there's any opportunity that you might be able to qualify for one of these, then I would submit it. But you'll have to provide payroll records that you've actually taken payroll.
Okay.
Okay.
One question I had, just for clarification. So the SBA disaster, they do require collateral, right? But the PPP right now does not require collateral, correct?
Correct.
Okay.
Because the difference is SBA, the disaster loans are by SBA, and it's more traditional SBA underwriting. And it's always been the case with SBA that if they make you a loan, and the reason people go to SBA is because they cannot get a traditional conventional loan at a bank, which usually would be maybe not so much less collateral, but certainly a better interest rate. So by going to the SBA, they take the collateral because that's the fallback position. So why SBA loans exist is, let's say a bank underwrites the loan and you're a little marginal. You know, it's just maybe a little more risk than they want to take. The SBA guarantee means it's typically around 75%. So if I'm thinking about, I'd really like to make this loan, I believe in this company, but I really need to shore it up. Then the SBA's guarantee helps them make that loan that they ordinarily would not. And so collateral is the piece that is the important piece as far as the SBA having a fallback position. And so if you get an SBA loan and you have an SBA guarantee and you default on the loan, the bank's been doing its due diligence, in other words, getting annual financial statements or those kinds of things, and it defaults, then they will cover 75% of the loss. So in order to do that, the SBA is saying, we want your collateral. We want that's your personal commitment that you're going to pay this loan back. Okay. So that's why the disaster recovery loan, again, is SBA, where the PPP, which is great. I saw Doug said, why would anybody go for this? All or part are forgivable, which is a big thing. Not making payments for a while is a big thing. And even if you have interest on the loan, it's very favorable. So, but that's the difference between the two, is one is Treasury funded with the stimulus money. The other one is a more traditional SBA.
Well, I guess, yeah, to go into his question, yeah, is there really any reason you wouldn't apply for the PPP right now? I mean, it almost, like you said, sounds like it could be a windfall for businesses.
Yeah, and again, keep in mind that you should have the intention, if you've had to lay people off, that you're going to bring them back. If you have employees, you're going to keep them. That's what it's going to be measured on, that forgiveness part. So when you get your documents, I'm anxious to see what they look like. And if someone gets this and gets some documentation and wants to send it to me, that would be great, because I know how to read through it and discern. So just to see, what those requirements are for the forgiveness. We've just gotten a little bit of information on it. So this whole thing is to try and keep people working, bring people back. That's what this whole thing is about.
Well, and the point of the PPP, correct me if I'm wrong, I mean, you have to prove that there's been some sort of impact financially on your business as a result of, the current events, right? The COVID-19, like, you can't just ask for the loan, for any reason, right? You have to show some proof that you've lost revenue or you've lost payroll or something has happened, correct?
Again, I haven't seen the whole application yet to see what all they are asking for. The main part has been, this is what payroll's been, and I'm sure there has to be the component of So I've had to lay everyone off. I've had to lay off half my staff. I've had to close because of the stay-at-home order. There will be that element. I just haven't seen the actual document for that, but you can guarantee they'll be asking that.
Okay. Another question says, since we have a very small payroll every month, between 1,000 and 1,200, we're weighing the time cost involved with applying versus the benefit we'd potentially receive, approximately 2,500, being more. What paperwork will be required on the back end to prove that we spent it on this to get forgiveness, or how complex is the application? I guess 2 questions there.
Yeah, and that's just coming out. It's certainly much shorter than the disaster recovery. Again, they're pretty much asking for the application. They're asking for your payroll records, to prove, how you got to the allowable amount. And then they want to verify you and your ownership in the company. So my initial instinct is yes. I certainly would.
Okay. Another person asks, is a business protected to still qualify for loan forgiveness under the PPP loan if an employee decides to not return to work, or is a business responsible for replacing them?
Again, we don't have enough detail on that back end. I would say, because a lot of people just had to let people go and they've got to rehire. So rehiring would be the answer. That would still, as far as I understand from everything, would still qualify. They would want you to replace that person because they base it on average payroll. And so they want you to be close to that average payroll.
Okay. Possible point of clarification, Doug says, looking at the PPP application, the only language about economic damage reads, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So I guess it sounds pretty loose, which probably feeds into what you're saying of obviously have your, ducks in a row, have it full, but the sooner you can apply now, certainly the better.
Yeah. So in terms of what I would quote would be when Juicy said, I need you to stay at home. And the mandates from the various cities, I don't know what Sahuarita did. I know with Tucson, it was a pretty explicit list of the companies that had to close. And so, if you had a copy of what that was, that mandate, it's in the newspaper, it was online, all those places, I would probably make a copy of that to show that you were one of these companies and that you did have to close. Right.
And for reference for Sahuarita, we are generally following the state's guidelines. So I guess we haven't, let's say, so far been as strict as some other jurisdictions. We're deferring to them, and things are changing, but yeah, just making that clarification. One other question. Person says April will show the real loss, so the proof won't come for a while. So we are using, are we using the last 12 months as proof, or how do you, I guess the question being, how do you really prove how you've been affected, since this is a real, kind of a real time thing, and maybe they won't really show their loss until later this month, or?
Well, again, unless, I don't know, Doug, if you looked at I'm sure I have one in my email right now because the applications just came out. But again, they're looking at a 12-month average, and you have 2 options. You can use 2019, which if most people have filed their tax returns, which were due March 15th, they should have that information in their payroll records. So, but if, say, payroll was bigger these 3 months, then they may want to use 9 months plus these 3 to come up with the 12. So whatever is more beneficial. So it's 2 different things. One is what the payroll records show that they're going to estimate, they'll determine the amount of the loan. And there will be, I'm sure, the question about, so how have you been harmed?
Right. Okay. All right. Do we have any other questions from participants. Maybe wait just a few seconds, but if not, thank you, Ellen. Really appreciate it again. Again, we have this recorded. It's our first time doing this, so it's a learning process for us as well, but we did record it, so we should be able to share it with you and send an email out to our list of attendees, and then you can also share it with others if you know someone that signed up or couldn't see it, couldn't participate now. Please do share with them. We're definitely going to follow up with some of those links that Ellen said and a few other things via email or MailChimp. So keep an eye out on your inbox for some of those. Yeah, thank you all again.
Yeah, so as I receive information, I have some links I can send right now, and which I will do right after, so you can send out. And then as I receive new information, I'll be sharing that as well.
Fantastic. Yeah. And yeah, for questions our residents or our businesses have, reach out to Victor or myself or Andrea now as part of our team. So mjansen@sahuaritaaz.gov or vgonzalez@sahuaritaaz.gov. Thank you all again.
I thought maybe we could we might end on a high note, and I know
Sure.
Ellen March is on the phone from Native Gardens, and each year the SPDC recognizes companies, and we have success awards we generally have on the legislative lawn, and of course with all of this it had to be canceled, but I did want to recognize Native Gardens for being a Success Award winner for the SPDC. This is a statewide recognition, and so congratulations.
Yeah, absolutely. Yeah, we know we weren't able to celebrate with you guys, but it's a wonderful honor, Ellen and Harry and Stephanie. So congratulations to you all. Yeah, I see. Okay.
Well, and Harry did a lot.
Oh, absolutely, for sure. Oh, you're welcome, Ellen. It was your guys' hard work. All right. Well, thank you guys again. Please contact Town of Sahuarita if you have other information. Our town hall is closed now for the time being, but we're still available. People are working from home, so you still can call or email us. A lot of us are forwarding our phone numbers to our cell phones or other places. So thank you to everyone again, and keep an eye out. Again, we might be doing another one of these next week or later, depending on availability and the people we can get. So thank you, Ellen, again, and
welcome.
Stay strong, everyone. You're definitely in our thoughts and prayers, and trying to do all the best we can. And just thank you to everyone for participating today. Bye-bye.
Thanks, you too. Bye.